Every empire leaves a mark, every currency tells a story, and history repeats itself, always. Today, one question hangs over the most powerful currency in the world. Is the dollar next? Welcome to Hidden Finance. In the next few minutes, we'll uncover 500 years of empires, money, and power. From Venice's trade dominance to Britain's colonial reach, to America's rise as a global economic force, every empire followed the same invisible blueprint: rise, peak, overreach, collapse. Why do the mighty fall? Why do fortunes vanish? The answers lie in trust, credit, and financial innovation. Each empire built systems that created wealth and vulnerabilities. The pattern is simple, elegant, and dangerous. We'll explore how empires gained influence, how money drove power, and how overextension led to decline. This isn't just history. It's a map of financial cycles that still shape the world today. If you've ever wondered who really controls money, or whether history can repeat itself, you're in the right place. Like, comment, and subscribe now, and stay with us as we uncover the hidden forces behind wealth, power, and empires. Next, we start with the origins: how Venice, the Dutch Republic, and Britain created systems of wealth that changed the world. By the end, you'll see the blueprint that connects the past to the present, and maybe even warns us about the $ES future. Lean in, stay curious. History doesn't just tell a story. It signals the rise and fall of power, and those signals are still visible today. History rarely tells the full story. Behind every empire's glory lies a hidden financial blueprint, a system that allowed them to rise far beyond their borders. To understand today, we need to look back 5 centuries. Our story begins with Venice, the epicenter of medieval trade. By the 15th century, Venice had created a financial network unlike anything Europe had ever seen. Merchants, bankers, and shipowners operated in a web of credit and contracts. Money flowed not just in coins, but through letters of credit and early banking instruments. Venice didn't just trade goods, it traded influence. The key was control and trust. Venetian merchants could lend, borrow, and invest across Europe because others trusted their system. Cities from London to Constantinople relied on Venetian money. Every loan, shipment, and contract carried not only goods, but power. This network of trust became the backbone of Venice's dominance. Next came the Dutch Republic in the 17th century. Amsterdam rose as Europe's financial capital. The Dutch introduced public shares, early stock exchanges, and government bonds. Wealth was no longer locked in gold or land. It could be mobilized, invested, and multiplied. This allowed them to fund wars, expand colonies, and dominate global trade routes. Innovation and agility became their weapons. Yet a pattern was emerging. Power follows money, and money creates overreach. Venice expanded, the Dutch expanded, but every empire eventually faced limits: wars, debt, inflation, and overconfidence. The seeds of collapse were planted even at the peak of success. Then came Britain, the empire that defined modern finance. By the 18th century, Britain controlled vast colonies, trade routes, and natural resources. Its true strength lay in financial innovation. The Bank of England, founded in 1694, allowed Britain to fund wars and industrial expansion at unprecedented scale. Public debt became a tool, not a burden. Investors around the world poured capital into British projects, creating a self-reinforcing loop of wealth and influence. Even the strongest empires faced invisible risks. Venice's wars drained resources. Dutch speculation created bubbles that threatened stability. Britain relied on distant colonies and mounting debt. The pattern was consistent: rise, peak, overreach, collapse. From these early empires, 4 key lessons emerge. Use trade to gain influence. Control currency and credit. Innovate financial tools to mobilize wealth. Expand globally, but beware overreach. The first signs of collapse were subtle: slight mismanagement, overborrowing, or markets stretched too far. Most observers only saw glory, not the cracks beneath. Yet these lessons passed silently from Venice to the Dutch Republic, and from the Dutch to Britain. Studying these beginnings, we see a blueprint that repeats across centuries. It explains why empires rise, dominate, and inevitably decline. Understanding this blueprint is key, not just to understand history, but to read the hidden signals of today's global financial powers. The 18th and 19th centuries marked a turning point. Trade alone was no longer enough. Industrialization, global markets, and financial innovation transformed the way empires built power. The blueprint remained, but the scale exploded. Britain led the charge. The Industrial Revolution turned factories, railways, and steamships into engines of wealth. Money flowed faster than ever, backed by banks, stock markets, and government bonds. The empire's strength came not only from colonies, but from the ability to mobilize capital globally. Investors in London could fund projects in India, Africa, or the Caribbean with a few signatures. Distance no longer mattered. Money moved at the speed of trust. Across the Atlantic, the United States was rising. The young nation lacked centuries of tradition, but it innovated financially. Early banks, state charters, and later, the Federal Reserve created systems capable of supporting rapid expansion. Industrialists like Carnegie and Rockefeller harnessed capital, technology, and infrastructure to dominate sectors ranging from steel to oil. Wealth accumulation became concentrated, and with it, influence over politics and trade. In Europe, France, Germany, and the Netherlands adapted. Stock exchanges expanded, government bonds financed wars and infrastructure, and banking networks crossed borders. Capital was no longer tied to gold alone. Credit and speculation became tools to grow influence. Each empire learned from its predecessors, Venice, the Dutch Republic, and Britain, but the stakes were higher. Mistakes now had global consequences. Yet the pattern persisted. Rise, peak, overreach, collapse. Britain's global dominance faced pressures from war debt, colonial unrest, and industrial competition. The United States, despite its rise, experienced cycles of boom and bust, from the Panic of 1837 to the Great Depression. Rapid growth fueled overconfidence, speculation, and systemic risk. The more money flowed, the more fragile the system became. This era also introduced modern financial instruments: central banks, national debt, stock markets, insurance systems, and investment funds. These tools amplified wealth and influence, but also created vulnerabilities invisible to most. A single market crash or banking failure could ripple across continents, something early empires never faced at such a scale. The transformation shows a critical lesson. Empires no longer fell just because of local wars or trade disputes. Global finance magnified both success and failure. Wealth enabled expansion, but it also multiplied risk. The pattern of collapse became faster and more dramatic. By tracing this transformation, we see the forces shaping today's world. Industrialization, financial innovation, and global capital created empires with unprecedented reach. But the same blueprint, trust, credit, overreach, remains. Modern superpowers still follow the same rhythm. As we move to the next segment, keep in mind, the rise of modern finance accelerated the cycles of empires. Understanding this era is crucial to seeing how today's dollar, debt, and global markets could face the same historical pressures that sank Venice, the Dutch Republic, and Britain. Today, the blueprint of empires is unmistakable in our modern financial world. The lessons of Venice, the Dutch Republic, and Britain echo in the dominance of the United States and the global role of the dollar. The US dollar has become the world's reserve currency. Every major trade, every international loan, every global investment is tied directly or indirectly to it. Control over currency is power. Just as Venice controlled trade through trust and coins, and Britain leveraged global markets through bonds, the dollar shapes modern finance. Nations, corporations, and investors align their strategies around it. Globalization has amplified influence and risk. Multinational corporations, stock markets, and digital finance allow money to flow faster and farther than ever before. Capital moves in milliseconds, making economies interconnected and vulnerable. A financial shock in one country can ripple worldwide. Exactly what early empires never faced on such a scale. Debt is central to modern empires, just as it was centuries ago. The US government, corporations, and consumers rely on credit to fuel growth. Interest rates, national debt, and financial markets dictate stability. Too much borrowing, poor regulation, or overconfidence can trigger crises. Echoes of Venice's overextended trade, Dutch speculation, and Britain's colonial debts. Technology has added a new layer. Algorithms, high-frequency trading, cryptocurrencies, and global banking systems accelerate both opportunity and vulnerability. Decisions made in New York or London can affect markets from Tokyo to Sao Paulo within seconds. Power today is not just military or territorial. It's financial, technological, and systemic. Yet the pattern remains. Rise, peak, overreach, collapse. Global superpowers can leverage their financial systems to expand influence, but overextension, whether through debt, speculative bubbles, or geopolitical conflicts, can destabilize everything. History shows it, and modern data confirms it. The modern impact is clear. While empires have evolved, the rules of wealth, influence, and risk have not. Today's financial leaders operate on a scale unimaginable to Venetian merchants or Dutch investors, but the blueprint is the same. Understanding these connections helps us read the signals of global power shifts before they become crises. In short, the past is alive in today's world. Currency, credit, and control still dictate who rises and who falls. And as history repeats, the lessons from 500 years of empires are more relevant than ever. The patterns of history are not just stories, they are warnings. Every empire, from Venice to Britain, rose on wealth, innovation, and control. Every empire fell due to overreach, debt, and misjudged risk. Today, the same dynamics shape the global financial system, and the question remains, is the dollar next? Modern economies are interconnected like never before. Supply chains span continents, financial markets operate 24/7, and capital flows in milliseconds. Opportunity has grown exponentially, but so has vulnerability. A small misstep in policy, a surge in debt, or a speculative bubble can cascade into a global crisis. The speed of money today magnifies the speed of collapse. Debt is the silent thread linking past and present. Venice overborrowed to fund wars. Britain borrowed to expand industry and colonies. Today, nations borrow trillions to fund growth, wars, and social programs. Credit drives expansion, but it can also drive collapse. The lessons are clear. Unchecked debt, overconfidence, and ignoring risk invite instability. Technology adds both promise and peril. Digital currencies, automated trading, and global banking systems increase efficiency, but they also create new forms of systemic risk. Algorithms do not recognize human judgment, and global markets can react faster than policy or regulation. The future belongs to those who understand both opportunity and vulnerability. So what can we learn? First, study the blueprint. Rise, peak, overreach, collapse. These cycles are predictable if we watch carefully. Second, diversify and balance risk. Just as empires overextended themselves, today's economies must avoid relying on a single currency, resource, or market. Third, trust is currency. Transparency, credibility, and sound institutions underpin every stable financial system. Without them, power erodes quickly. The future is not written, but history gives clues. Watching the dollar, global debt levels, and financial markets through the lens of past empires reveals patterns, warnings, and opportunities. The blueprint persists. It is up to leaders, investors, and citizens to read the signs. History repeats, but it also teaches. Venice, the Dutch Republic, Britain, all rose, dominated, and ultimately fell. The same forces shape today's world. Understanding them is not just knowledge, it is survival, foresight, and power. 5 centuries, 5 empires, 1 repeating blueprint. From Venice to the Dutch Republic, from Britain to the United States, history shows a clear rhythm. Rise, peak, overreach, collapse. And today, the dollar stands at the center of a system shaped by the same forces. We've seen how trade, innovation, debt, and trust built empires, and how overextension and mismanagement brought them down. These patterns are not just history lessons. They are a roadmap for understanding the present and anticipating the future. Every financial decision, every policy, every market movement carries echoes of the past. So what does this mean for you? Stay informed, watch patterns instead of headlines, and understand the forces that drive money, power, and influence. The world of finance moves fast, but history moves faster. Recognizing these cycles gives you foresight, strategy, and perspective. If you found this journey through 500 years of empires insightful, don't forget to like, comment, and share. Subscribe for more deep dives into the hidden forces shaping our financial world. Your engagement helps uncover more stories, patterns, and lessons that history keeps repeating. History does not wait. Neither should you. The blueprint is clear, the lessons are timeless, and the question remains: are we ready to read the signs before the next empire or currency faces its turn?